My name is Amir Farish bin Abdullah. Student number 2025612812.
Hai, Assalamualaikum warahmatullahi wabarakatuh. So, my name is Muhammad Haikal bin Habibullah and my number ID is 2025419422.
Assalamualaikum. My name is Muhammad Asfar bin Zubair. My student number is 2025440102.
Just Eat Enterprise is a sole proprietorship company funded by Mr. Ahmad Hussaini. He invested around 1,310 as a capital to start up his business to improve his income with a low budget ideas. The company started on 2023 and till this day, Mr. Hussaini still sells the company product in an online platform such as Shopee Food, GrabFood, Foodpanda, and etc. He did not open any physical store as this was his original idea as a side income business. Just Eat Enterprise is a home-based company located at Sungai Bersih. Furthermore, I will explain to you about assets. Asset can be defined as a resource's economic value and is expected to provide future benefits such as generating income or being converted into cash. Non-current assets. In this business, non-current assets of Just Eat Enterprise are mini pancake and waffle maker, industrial mixer, refrigerator, freezer, and IT equipment. Current assets. Current assets are crucial for day-to-day operation and are expected to be turned into cash within 1 year. For Just Eat Enterprise, the current assets are inventory, cash, and bank. Long-term investment. Resources can be converted into cash more than a year. This business have invested in commercial kitchen, equipment, and intangible assets. Next up, I will explain to you about their classification of business item. Just Eat Enterprise includes various debts essential for daily operation. For example, a comparable for their liability. For capital, Just Eat Enterprise have a capital of 1,310 ringgit. For revenue, his simple business is mainly through their sale, which is a lump sum of 1,000 ringgit a month. For expenses, Just Eat Enterprise mostly on goods of sold such as raw materials, packaging, marketing, and miscellaneous.
The recording process is how business record, organize, and summarize its financial transaction. This process is important because it helps the business track income and expenses, avoid error, and prepare financial statements. The first step in the recording process is to source document. Source document proof that the transaction has occurred. Example include receipt, invoice, cash bills, and bank slips. For example, when a business buy raw materials or sells product, a receipt will issued. This document keep before any accounting record is made. The second step is to journalizing. All transactions are recorded in journal, also known as the book of original entry. Each journal entry includes the date, account involved, debit, credit, and short descriptions. For example, when a business makes sales, cash is debit, and sales revenue is credit. The third step is posting to the ledger. After journalizing, transaction are transferred to the ledger account. Each ledger account shows the balance of a specific item such as cash, sales, inventory, or expenses. This step helps The business organize transaction by account. The fourth step is preparing the trial balance. A trial balance lists all the ledger account balance at the end of the accounting period. It purpose to check the total debits equal to total credits. If the amount do not balance, it means there is an error in recording. The final step is preparing the financial statement. The two main financial statements are the income statement, which shows P&L, profit and loss. The second is the statement of financial position, soft P, which show assets, liabilities and owner equities. This statement helps the owner to understand the business performance and financial position. In conclusion, the recording process of business involves 5 main steps, which is source documents, journalizing, posting to the ledger, and then make trial balance. The last step is make a financial statement. This process ensure that financial information is accurate, organized, and useful for decision making. That's all.
Right, so in this presentation, I will explain about the strengths and weakness of the recording process in accounting. So the recording process is very important because it helps a business record transaction accurately, starting from source documents, then journalizing, posting the ledger, preparing the trial balance, and finally producing financial statements. I will first briefly explain the strengths followed by the weakness of the recording process. So my first point is ensure accuracy and reliability, and because one of the main strengths of the recording process is that is ensure accuracy and reliability. Means that every transaction starts with a source document such as receipts or invoice. This helps make sure that all transactions recorded are valid and supported by the evidence. And my second point is provide clear evidence or transaction. Is because source document acts as proof that a transaction actually occurred, and because why this increase transparency and helps reduce misunderstanding or dispute, especially when reviewing past transaction. And my number 3 point is systematic and organized process. Why? Because the recording process follow a clear and systematic from the journal to the ledger, then the trial balance, and finally financial statements. This make financial record well organized and easy to track when needed. So for the number 4, helps detect error early, because by preparing a trial balance, the business can check whether total debits equal total credits. So this help detect error in posting before financial statement are prepared. And number 5 is support better business decision. Because why? A correct financial statement such as income statement and balance sheet helps the owner understand profits, expenses, assets and liability. This information supports better planning and decision making. And for the number 6 is useful for auditing and accounting record process, make it easier to review transaction during audit or check. So now I will go for the weakness of the recording process. One weakness of the recording process is that it can be time consuming, especially when done manually, because each transaction must be recorded step by step, which can slow down daily operation. Second point is risk of human error, because why? manual journalizing and posting can lead to human errors, such as incorrect amount of the posting to the wrong account. This mistake can affect the accuracy of the financial record. Third point is accounting knowledge. Recording process requires basic accounting knowledge. So, without proper understanding, the business owner may record transactions incorrectly. Witness number 4, dependent on source document. If source document are lost, damaged or not properly filled, the recording process become incomplete and unreliable. Number 5, it can be difficult to maintain consistently. Because why? Because daily recording must be done consistently. If delay, entires accumulate and cause confusions or errors. And number 6 is not efficient without technology. Because if without technology, such as accounting software, the recording process become less efficient as the business grows and transaction increase. So in my conclusion, the recording process has accuracy, organization and support for decision making. However, it also has weakness, including being time consuming and prone to human error. Therefore, business should manage their recording process carefully and consider using technology to improve efficiency.